Now, Japan's economy shrank slightly less than initially reported in the first quarter as private consumption remained resilient in the face of resurgent COVID-19 infections and companies rebuilt their stock. Now, while the slow contraction is welcome news for the policymakers, hoping that the economy will return to growth this quarter, persistent supply chain disruptions, that remains a risk to economic momentum in April to June. Revised GDP data released by the Cabinet Office showed Japan's economy shrank an annualized 0.5% in January to March. That was a smaller drop than the preliminary reading of 1% fall released last month. On a quarter-on-quarter basis, GDP lost 0.1%, beating median market expectations for a 0.3% drop. Private consumption, which makes up more than half of Japan's GDP, increased 0.1% in the first quarter from the previous 3 months, revised up from a flat reading thanks to stronger contribution from mobile phone fee and car sales. An increase in inventories also supported growth, in a sign that automakers had other manufacturers were looking for ways to cope with supply chain pressures. That also helped offset a 0.7% fall in capital spending, but could indicate lower GDP growth in the current quarter as inventory growth cools. WION is now available in your country. Download the app now. Get all the news on the move.